The best of Money Matters. Market View on Money FM 89.3.
It is now 5:40 p.m. Time now for Market View, where we speak to an expert every weekday to get a pulse on markets in Singapore and beyond. And the latest closing number for the benchmark 30 stock Straits Times Index today, up 0.2% at 39.34. And here to giving us his take on the markets today is Dan Chang, a familiar voice here on Money FM. He's a trading rep from PhillipCapital. Thanks for joining us, Dan.
Hey, hi, Frankie. Happy Wednesday.
Happy Wednesday to you too. Let me start first of all by talking about some of the earnings that came out from a couple of blue chips this morning before the opening bell. Let's begin first of all with UOB. A fairly decent set of results this morning for the fourth quarter and 12 months ended 31st December. Record earnings, in fact, 6 billion for the full year, driven by strong non-interest income. And the bank has also unveiled plans to reward shareholders to the tune of $3 billion in the form of special dividends and share buybacks over the next 3 years. Now, judging from the share price reaction today, Dan, I want to hear from you. It looks like investors are just happy to take some profits after the stock hit a new 52-week high of 39.20 this morning. Would you wait for better entry points for UOB?
Well, I think, it is a bit of a bumper, right? I mean, having to hit a high of $39.20 only to close in the red today. Well, I think by and large, right, investor will be happy to see FY24 final dividend of 22 cents. On top of that, there will be a special dividend of 50 cents, as you mentioned. And as you said, right, prior to the result, there was already a run-up. Okay? So, in fact, before this morning, in the last 4 trading days, right, it had jumped from $37.47 to $38.33, and it hit a high of $39.20 early this morning.
Yep.
So I think it's natural for profit taking to set in. I mean, after all, taking money off the table can never be a terrible move. Okay. That said, right, I think the overall medium to long-term outlook is still quite positive, especially with the announcement of the new $2 billion share buyback program.
That's
it
right.
should
Yep.
help to support the price.
Okay, UOB, of course, being the second Singapore bank to announce its fourth quarter and 2024 full-year results. OCBC will be the last lender to release its numbers, and that's happening next Wednesday, the 26th of Feb. Are you expecting any surprises, or will OCBC mostly follow in the footsteps of DBS and UOB?
Well, I think the three local banks that we have here, right, DBS, UOB, and OCBC, the largest in Southeast Asia by assets. And the three local banks, right, is just like three chefs in the same kitchen, each serving up a confluence of financial service to investors. So while each of them have a respective niche market in certain area of the financial services that they offer, right, just like each chef has their special dish, by and large, being in the same kitchen, in the same geographical area that these three banks are in, their results tend to be in tandem with one another. So, given reflecting on these OCBC performance in the first 9 months of 2024, the bank has reported a 9% increase in net profit, and the growth was then driven by wealth management activity, higher insurance income, and reduced allowance. So, I think these are the three areas where it is OCBC's niche, okay, and I'm expecting that this segment to do well again in 4Q. And given the strong performance of DBS and UOB, who have both just released their 4Q and full-year results, it's reasonable to anticipate that OCBC might report similar positive trends. That is, robust net interest and fee income.
Okay, and I want to talk about another blue chip stock that announced results before the opening bell today, and that was, of course, Singtel. Earnings for the quarter ended 31st December. Overall top line, unfortunately, was flattish, although contributions from associates went up nearly 23%. Bottom line more than doubled to $1.3 billion, but that was primarily due to one-off items. Is Singtel on your radar at the moment, or are there other better bets elsewhere?
Well, I think this boils down to the investment objective of each investors. I mean, if investors are looking for high growth stock, I think it might be better off to look elsewhere. However, if investors were to take a medium to long term view, I believe Singtel still has much to offer. Okay, firstly, on growth, I think its data center business is a growth driver, considering the continuing optimism in the AI trend. Okay, and it has also stated in its earnings press release that the earnings before interest and tax is expected to grow by the high 10s to the low 20s in FY24, which I think is a decent number. Okay, and secondly, on dividend, in their press release, Singtel has said that it's expecting to pay out 15.5 cents worth of dividends. Compare that to 15 cents in FY24, so that's like a 10% increase in dividend payout per share.
Right.
And on the chart, right, we have seen Singtel testing the resistance level of $3.40. I think if we can break above that level convincingly, right, I would like to think that there are more potential for upside. Yeah. So, in a nutshell, I would still place my money on Singtel if I were to be looking at stable growth with good dividend over the mid to long term.
We are talking to Dan Chang, a trading rep from PhillipCapital. Dan, I want to talk about next the first set of measures announced recently by the MAS Review Committee set up to rejuvenate Singapore's stock market. Full details we know will be out this Friday, but the broad strokes were pretty much unveiled over the past few days and even yesterday during the budget announcement. And these incentives primarily relate to tax benefits, and in essence, we are dishing out various tax benefits to get businesses and fund managers to list and to invest here. Once again, the government has said GIC will not be using any of its monies to put into the local equities market, as the Sovereign Wealth Fund must, first of all, protect Singapore's reserves and not risk making lower returns. Now, my question to you, Dan, is what kind of message is Singapore sending by saying this? That it's not okay to put Singapore's reserves, aka taxpayers' money, at risk, but it's perfectly fine to use capital held by fund managers to invest in Singapore stocks?
Well, I think it's a bit tricky here. Firstly, I appreciate the effort of the equities market review group in strengthening the Singapore equity market. I mean, they have clearly taken note of the key issue and are eager to find solutions, which I think is encouraging. Okay, so I mean, from the perspective of a regulator, right, I'm clearly not qualified to judge the effectiveness of this measure. But as a market participant, a part of this, the local market ecosystem, I recognize that the challenge that they aim to address. Okay, perhaps, more can be done to enhance the market competitiveness besides, tax incentives that they are proposing. I mean, I'm in no position to provide specific suggestions, as this is not my area of expertise. But I really look forward to see how these initiatives can unfold. And I really hope that this is a sign of more initiatives to come in the near future, especially as you mentioned, maybe we'll have more info, more light to be shared on these Fridays.
Can I get your take on the market's reaction to the share price of the Singapore Exchange? We know that the stock fell late last week after the MAS put out the announcement saying the first set of measures were released. That also coincided with the stock of SGX going ex-dividend that day. Was it? My question to you is: does the pullback of the share price reflect the market's disappointment with this first set of measures?
Well, I think it's all about expectations. Okay, prior to this tax incentive announcement by MAS last week, right? We have actually seen SGX surging from a low of $11.91 to $14.04 in the space of 5 days. So that is quite a significant jump in the share price. within a very short period of time. Naturally, with this backdrop, right, the market is having very high expectations. But as it turned out, right, share price dropped significantly after that, and we also coincide with XT, as you mentioned. So if you want to ask me, holistically speaking, I would like to think that the contributing factor for the drop of the SGX share price is actually a combination of the XT, the profit-taking, and of course the disappointment over the measures.
Okay, Dan, one final question before we wrap up. What else is on your radar for the rest of this week?
Well, there are quite a few companies that are releasing their result or business update in the next 2 days. The notable ones are Wilmar, Genting, SIA, Venture, Stats, and Citrum. Okay. Genting and Citrum have been enjoying high trading volume of late and also saw some uptick in the price movement. So I really hope that both don't disappoint in the next 2 days. Stats will also be in focus, mainly because last year was the first year it turned black, so investors will monitor to see if it can keep up the positive number. And of course, yesterday, the Singapore budget, they did mention a 5 billion top-up to the Changi Airport Development Fund, which could see assets as the beneficiary of that initiative. So these three counters will be the stocks that I'll be eagerly monitoring for the next 2 days.
Okay, great. Thanks for your input, Dan. We've been talking to Dan Chang, a trading representative from PhillipCapital, here on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.